Now, the redevelopment of idle urban retail centers, some of which are affected by brownfields, as you had mentioned, seems to be a key to revitalizing struggling neighborhoods, and I have some neighborhoods like that in my area in Cincinnati. Could you tell us how the expensing incentive has helped your company to undertake these new projects?
Well, the expensing provision helps because the brownfield and the cleanup costs are incurred at the very beginning of the project. They're a large unknown. In the real estate development business, everything from the ground up is something that you have a pretty good handle on. You know what the building is going to cost because you can get estimates. You have engineers that can give you costs on many things. But the minute you put a shovel in the ground, or in the case of an urban redevelopment, the minute you have to start taking a building down and you don't know what's inside it, the risk factor goes up extraordinarily. And so looking at a cleanup of a brownfield as an exercise and an additional cost to the project, not knowing how much it's going to cost, but knowing that if you have to incur that cost, at least you will be able to expense it and not have to depreciate it as if it were part of the building over a long period of time, significantly affects your go or no-go decision because it's at the front end. So many projects, you don't even know they didn't happen. They just don't happen. You don't know if anybody ever looked at them or not.
Okay. Also, the new markets tax credit encourages private investment in underserved areas, and I also have a number of those areas in my district that we've worked with new markets and had things actually occur that wouldn't otherwise have occurred. Could you discuss new market and how?
Sure. I've been involved in the New Market Tax Credit Program for a long time in the sense that I was involved with two organizations, LISC and the Enterprise Foundation, when they originally were trying to come up with the program. It was originally, the concept was that it was going to be similar to the tax credit housing project type of thing, where it was going to provide equity and it was going to fill the gap. In many of these redevelopment projects, there's a significant gap between risk and return and the risk and return in some other project somewhere else that will attract the capital instead. So the New Market Tax Credit does serve that purpose, and it has worked with some effect. I will tell you that for many small developers, it has been challenging to use the program because it's complicated, and the allocation of the tax credits often go to banks, and those banks often have selected or elected to offer the value of that credit at slightly below the mortgage rate at the going time and retain most of that leverage or most of that additional gap-filling possibility for themselves. And so I think while we support the renewal of that program, I would also urge the Congress to look at streamlining that program and making it more targeted toward the actual purpose that was intended.
Thank you. Mr. Burlingame, do you believe that the R&E credit would be more effective, especially for small firms, if it could be made permanent? If we knew it was going to be in existence, we could count on it, depend on it?
Yes, I would agree. I would believe so. I think that when we look at our businesses, especially in the area of product development and R&D, the long-term commitment to activities are critical. Most products take multiple years to get to market from concept to release and design. So I think that that's critical to us. That's why we have asked for it to be extended beyond this annual type of activity to 8 years, so that we can make a long-term investment and know that it's not going to dry up a year later. And so it does, our model, and I think the members of SEMI who are doing R&D have a long-term commitment to R&D, and they need it in order to produce a product. It's not a 6-month activity, it's a multiple-year activity.
Okay, thank you. And finally, Mr. Shepard, we had talked about the death tax or the federal estate tax earlier. I'd like to give you one opportunity again to go on another issue. We talked just briefly about LIFO and the challenges, the problems, et cetera. Could you tell us what LIFO is and what you think ought to be done about that?
Sure, thank you. LIFO is a method by which profits are determined for purposes of tax. It stands for last in, first out. So my business is very heavily raw material intensive and involving many commodities, and the prices on commodities change over time. The LIFO provision offsets, last in, first out says that when I determine my profit, I am looking at my most recent price on a raw material purchase rather than my most distant. So the profit is calculated based on my replacement cost of that raw material rather than really on speculation in the market. I understand that that's that there's discussions going on to eliminate the LIFO tax provision. And that would be disastrous, and I think it would be wrong-headed. It's wrong-headed because if we do a lot of business with a metal called cobalt, and you have a chart in the packet, I don't know what it's even called, that I handed out, my written statement that shows the volatility in the price of cobalt. It is quite volatile, and if the price, say, started at $10, and at the end of the year it's 20, and in some years that would be a mild increase, the first in, first out method, which is what we'd be looking at if LIFO went away, would assign profit to our company for that $10 per pound that the price of cobalt increased. That's not money that we have available. We've invested all the money that has come in because the price of cobalt went up back into working capital for our company, back into cobalt that's in our inventory. So at the very time, if LIFO were eliminated and we switched to FIFO, at the very time that we are cash strapped because the price of cobalt, for instance, went from 10 to 20, and we had to finance that increase in that raw material, the government, under FIFO rules, would be looking for dramatically increased taxes. And then on the other hand, cobalt does go from 20 back to 10 also. At the very time when we're rolling out at the very time that we're responding to the reduced price of cobalt with our prices, and we're gaining the benefit of lower priced cobalt in our investment, in our working capital, and therefore are cash rich, the government would be saying, no, you're losing money because your prices are coming down. So it would create tremendous complexity in our cash management and great inefficiencies, because when it's time to invest, we wouldn't have the cash, and at other times we'd just be flush with cash.
Okay, thank you.